And we are live. Welcome to this edition of Tax Tips Tuesday. I love this day. Today is going to be fire. Be ready to take some copious notes. I promise you it is going to knock your socks off. Well, my name is Leah Garcia, financial strategist and insurance professional. And it's really my crusade to help you properly protect, distribute, and transfer your wealth so that you can build a legacy and create generational wealth for your family. Because it's not about how much money we make. It's about how much money we keep and how much money we pour in future generations. Because if we make a bunch of money just to spend a bunch of money, that's not wealth. And if we make a bunch of money just to pay a bunch of money to Uncle Sam, well, that's not wealth either. It's about understanding the rules of the game. Listen, for every action, there's an equal and opposite reaction. And what I mean by that, for all the rules that work against us, there are rules that can work for us. And we call it money chest. And my absolute guest is brilliant. Okay. She knows how to play the rules of the game. She calls the tax code a treasure chest. And I love that. And she's going to share an amazing golden nugget with you. We're talking about the Augustus rule and how we can use this. A lot of you may be seeing some things online on TikTok and stuff, but she's going to break it down and really open up your mind to this incredible tax saving opportunity. And with that, go ahead and take it away, Miss Chris.
Okay, hey y'all. It's good to be back. And today we have a little nugget for you. So today I'd like to address the Augusta rule. I think everyone have heard about the Augusta rule in some capacity because it's out there on social media. Everyone is talking about it, right? So, but there are some common misconceptions associated with it and that I'd like to discuss today. So the first thing is, what is the Augusta rule? That's where the first misconception occurs, right? So most people are like, the Augusta rule allows you to rent your home to your business and you keep the income tax free. That part is true, but it is more than that because the tax code doesn't say rent your home. It says rent a dwelling unit that belongs to you. So that means that firstly, it could be your primary residence or it could be a secondary residence, which is a vacation home that you own. So you're not limited to just the primary resident. So that's the first residence. That's where the first misconception occurs. And then it says that you can rent that dwelling unit to your business. So everyone thinks that, okay, I can go out and I can have meetings or I can do whatever, have whatever event at my house, and then it is an automatic tax deduction. No, it's not. So there are rules that you have to follow to ensure that you can get those deductions, right? So one of those rules is when you're renting your residence, whether it is your primary residence or it is a vacation home secondary residence, the first thing you have to do is be sure that the deduction that you're taking for that is fair market value. And in that fair market value, there's a nugget in there as well. So when you say fair market value, everyone runs out and look at, well, what does an Airbnb that looks like my house in my area cost, or what would a hotel room cost, and then deducts that amount for the home. But IRS says fair market value. That's all it says. It didn't stipulate how you arrive at fair market value. So fair market value could, yes, be an Airbnb, but let's say that my residence is in an A market, right? And then there's high quality hotels in my A market. So let's say there's a Four Seasons in that market and a suite at the Four Seasons rent at $1,200 a night. Then what's to say that my deduction can be the same deduction as the cost of the suite at the Four Seasons, right? Then if we want to expand on it for a little bit, let's think about this. If you're a business owner and you have employees and you have a home that could accommodate your employees and that you're willing to set up your to either train or have a retreat, strategy sessions with your employees, the IRS allows you to do that 14 times a year. So now let's think about this. let's say I have 10 employees. And if I have, if you're going to have a retreat for your employees, 3 days for retreat for your employees. If you had to rent a hotel room, let's say the hotel room might be $600 a night. If it's your executives, right? You're renting something that is at the level that your people are. So let's say it is $600 a night. Now you're renting your home, 6 employees at $600 a night for 3 nights.
Wow.
But let's expand it even a little bit more, because if you're having retreats, right, corporate retreats are not cheap. So if you're having a corporate retreat, that's what that's what it is. If you're having your employees in a say we're using my home, but we're having my employees in this space for this time. We're providing meals, we're doing everything in during that time. We're training, we're strategizing. A corporate retreat would cost you how much?
Oh, thousands.
On average, a corporate retreat will cost at least maybe $1,800 per employee, maybe more
Oh, yeah,
per
for
day,
sure.
right?
Yeah.
So if you
Right.
have 10 employees at $1,800 per employee per day for 3 days, you use your residence instead. You use the corporate retreat fair market value, and that is your Augusta rule deduction for that event, right? So it is not just limited to fair market value of the next room of the hotel room down the street or the conference room down the street. It is just the fair market value. It really just depends on what is the event that you're hosting. Most people are like, well, I hold board meetings at my home. Yes, you could hold board meetings at your home, but you could do so much more. As long as you're willing to open your home to bring in your executive team or your employees into your home to do that, then you can host and you can charge that those fees. Now the next question is, well, how do I pay myself for that? So a lot of people think that, well, we have this event, we had like 14 occurrences during the year, and then at the end of the year we're going to take we're just going to take a huge amount and transfer it to our personal account. That may work, but it is one of the things that is an audit red flag. So the IRS requires the payment to be timely, which means that I tell clients do it either the day before or the day after the event, but just be sure that it's done within 30 days of the event occurring. That is timely, right? To ensure that even if the IRS queries the expense, then your the audit is going to be uncontested. It is going to be, you're going to get an audit, no change result on the audit. So then the next thing is, okay, so I had the event, and now how do I pay myself? So you have to be sure that when you're paying yourself, it is a direct transfer from the business account into your personal account. So it can't be I paid for the, say, whatever services that were added. So let's say food was provided, I paid for all of this out of my account, and all the business is reimbursing me. You can't do that. It has to be a direct payment out of the business account into your personal account. The next thing is there has to be a lease in place between you and the business. It can't just be I had an event at my house, whether it was a retreat, whether it was a strategy session, whatever it was at my house, and now I'm going to just transfer. There has to be a lease in place that is a formal document with the terms of that rental. So the terms meaning that whenever my home is used for business purposes, these are the things that happen. These are the terms. This is how much the payment is going to be. This is when the payment is expected, and all of those things has to be detailed in that lease. The goal here is to always document everything, so that when IRS comes knocking, or if IRS comes knocking, and that's when I advise clients, I am always operating from the standpoint the point that IRS is eventually going to come knocking. So I always tell a client the goal is when the IRS comes knocking, all your documents are in place, your I's are dotted, and your T's are crossed. So you have whatever the event that you host. If it's a meeting, there's minutes of the meeting, everything that happened, how it happened, the order in which it happened, right? Date, time, place, who attended, what was discussed, everything in the minutes. If it's a retreat, it's a 3-day event, everything that's happening over the course of that 3-day event. So a 3-day event may have trust exercises between employees for 1 day. It's just employee bonding, getting your employees cemented into your culture, all of that, what the activities are, that's recorded. If there is training, the training is recorded. So everything is recorded. So if the IRS comes calling, here, take this. This is what we did. This is what happened. This is how the order in which it happened. This is who was there. And then you get to take your deductions.
Wow, wow, wow. So much fire in there. And I have a personal question, but I want to welcome a few people who've joined us. I want to welcome Joe Hargrave. She is actually a small business owner and she loved these tips. She said, these are amazing tips for small business owners. She is actually a painter contractor, I believe. And then, of course, we have Mr. Mic Drop, Mr. David Joe. I call him Mr. Mic Drop. He's always dropping golden nuggets. Listen, if you're ready to upgrade from your Dusty Questy website and business card, you got to talk to the Hello LLC. I'm telling you, I give them credit for all this stuff. They take care of me. They've got my back. They've upgraded me. They've taken me from just a little thing to now I have a whole production. So I definitely recommend to have a coffee chat with them. And then we have Mr. Sam Hall. Listen, we're all trying to get better in all areas, right? I believe true wealth is having success in our faith, family, finance, fitness, and fun. And if you're looking to upgrade your health, Mr. Sam Hall has an incredible health quiz that I recommend that you take. It's very, very comprehensive. It's free. And then you can get the results there without even having a conversation. And then he'll be happy to have a conversation about the results for you. And then we have the one and only Queen Dr. Leslie Flowers. Listen, she is our Think and Grow Rich mastermind guru. And she's actually written a book called The Errata. And I'm telling you, if you love sassy stuff, if you love thinking things that make your hamster wheels turn, you got to read her book. It's now available on Audible, and I cannot wait because I love Audible, and I believe this is going to be incredible. So definitely check out our Queen Dr. Leslie and Flowers. And by the way, if you're looking to achieve your goal, she has an incredible goal class that I believe is transformational for anyone. Even if we're looking at Q2, maybe you didn't start it in January, that's okay. You can push the restart button. So reach out to her. And then we have our menopause mentor, our dietitian, Miss Lisa Favec. She talks about all things health. And yes, I got to admit that I do love KFC. She called me out on my KFC craze that I do have from time to time. But if you're ready to get your health and fitness on track, female or male, she definitely is there for you. So yes, please visit my Biz in a Box. It's incredible. So here's my question. You got my hamster wheels turning. I love this. So now, what kind of numbers are we looking at to charge for our speaking? You know, because maybe some of us are really speakers and we do charge thousands of dollars to be guest speakers. Like what kind of numbers are we looking at here? I don't know. Give us some ideas. What can we charge for our speaking, or how do we start to mathematically reverse engineer that, what we should be charging for our speaking?
For speaking in relation to the Augusta rule?
Right. And to like your corporate event. And so now you're a guest speaker of your event, you're teaching, you're training your team. So what could you do?
The fee, the deduction is not for if you're speaking at your own event.
You don't get paid for that.
No.
Okay.
Because it's your business hosting the event.
I had to try. Somebody else was thinking that. Somebody else was thinking that. And if you have any questions, go ahead and type it in the chat. And we do have this comment here that I definitely been a highlight. Let's see where I'm going to get back to this here if I can. Oh, maybe I can't. For Miss Joe, you've already got an incredible fan right here. She says, "Can you do my taxes?" Yes, she can. If you qualify, right? If you're in the right demographics for her. But I'm telling you, I have talked to many, many tax professionals, CPAs, enrolled agents, you name it, probably hundreds, if not thousands. I have searched wide and far to actually find Miss Chris. Her knowledge is very exclusive. And not only that, but she's always open to more opportunities. See, she understands that there's always a rule out there. There's over 86,000 pages in the tax code. No one person can know every single thing. But when we bring this together, right, that's where the mastermind, that's where the power of the mastermind happens. So let's see here. She said, basically, I get nothing, maybe $500. I'm not sure what that means. And then, please, so I do love KFC, just so you guys know I do. She said, that's okay. I have a healthy diet most of the time, but I do have a craze for KFC. I promise you, it's pretty crazy. I don't know why. We have the best KFC out here in Seaside. This depends on your training and your level of expertise and your credentials. I think she's talking about if you're going to charge. But so I was wondering if I could charge for my training at my own event, but Chris put the thumbs down.
If the Augusta rule says you renting the resident to your business, right? So if you renting the residence to your business, it means that you get to deduct the use of the residence, but you as a speaker, you bring in your employees or whomever you have in the meeting with. You can't charge a fee for you as a speaker.
Darn, I had to ask. Here's a question here. With the depletion of the IRS personnel, what do you see for the future of the system? A lot of IRS agents have been let go, I guess, recently. So what do you think, Miss Chris? Where does that leave us?
To be honest, I think that our tax system does need a little bit of an overhaul, where the cutting of employees is not something that is beneficial to that, because already, even as a tax professional who has access to special lines or that you can call to get access to the IRS, it's an issue for already with less employees. It's even worse, and then it is even more so for a taxpayer without representation trying to get anything resolved with the IRS, right? So cutting the staff is just going to make that worse. On the other hand, though, I do think that if the IRS system gets the overhaul that it needs in the way that it needs it, a lot of technology might make a difference in the way things are handled over there. So it just depends on what direction that they're taking that overhaul. Is it just going to be, well, we're thinking about cutting expenses at the federal level, and so we're firing employees, and there's no plan as to how we're going to make up for those employees being fired, or there's no plan for us to use technology to help in any way to make it easier for taxpayers or anyone who has to negotiate or navigate the IRS system. Then we have a huge problem. And I won't say the word that I would use, but it is a huge problem. And the tax system, based on what it is being bandied around out there, they're saying that we're getting a major overhaul, that the IRS, we're also going to get rid of the IRS. So for the people who are saying that we're going to get rid of the IRS, I'd like to ask them, if we get rid of the IRS, where is the income going to come from for everything that the country needs? Yes, our tax system may need an overhaul, but getting rid of the IRS completely is not something that I see as being beneficial to the country. So It is a complex question that requires a really complex answer. There is no one answer that is definitive. Okay, it is going to be this way or it's going to be that way. I think that we need a lot of people we need different minds to come together. And actually, if we're finding a solution, find a solution that works for the taxpayer and also works for the government, in the sense that the services that are being provided are the services that are needed, and that the taxpayer have access to those services when they need it.
That's brilliant. That is brilliant. And we do have another question, but I'm going to ask this question a little bit differently, kind of anonymously. Okay, let's ask it anonymously. Let's say I am an employer, and I'm hiring some 1099 employees. I'm paying them cash under the table. What are some things that could be potential landmines for that kind of situation?
Okay, so the first thing, you said 1099 employees. You can be 1099 and be an employee at the same time. IRS rule says a 1099 contractor is someone that you're not directing their work, which means that you're paying someone to come into your business and perform a certain service or whatever it is that person does. You do not have to direct it. So if you're directing someone's work, it means they're an employee. If you have to give them day-to-day tasks, they're an employee. If there's a handbook that tells them this is your job and this is what your job entails, they're an employee. They're not a contractor. Now, when you employ someone who is an employee, but you're paying them as a contractor, then it breaks the employment rules. It breaks IRS rules, because now you're paying someone. Basically, it's a way of evading taxes. It's not avoiding, because avoiding taxes is legal. Evading taxes is not, right? And then that's just at the federal level. At the state level, there are certain states who will pursue very, very vehemently people who are paying 1099s instead of employees, and especially under the table. Under the table, one of the things that you have to think about for under the table, it is not just an offense for like breaking an IRS rule or breaking a state rule. It is a criminal offense. So if that person that you're paying under the table is an illegal immigrant, for example, then that is a criminal offense. And so it is not just about the tax part of it. There's taxes, yes, there's the state, and then there's immigration laws that you have to think about.
Wow. So I would say and I run across this a lot. I help a lot of contractors, plumbers, roofers, electricians, and a lot of them they do a 1099, so they're not having employees, but then they are telling them when they have to be at work, how to do the job. Like, that's a potential major issue. And I think a lot of times they do that because they're trying to avoid workers' comp. They just think it's too complicated. But at the end of the day, what are you trying to do with your business? Like, if we're working so hard to stay up late, work weekends, work nights, miss birthday parties, and then at the end of the day, we just close our business, we just bought ourselves a job. So I believe that if we're working this hard, we should have a sellable business. And we can't have a sellable business if we're doing those kinds of things. So I'd love what else you'd like to add to that?
That's true. And also, beyond just the having a sellable business, right? It is, if you're working this hard to build something, I'm not sure about anyone else, but for me, the thing that I am after is legacy. I want to create something so that my kids, my grandkids, my great grandkids do not have to go through the struggles that I did. And if legacy is what you're after, if creating a business that you can pass on, or even a business that you can sell, then why would you risk it over things that are so trivial? Yes, it may be a little bit complex with workman comp, and you may feel that it's unfair that you have to pay taxes for an employee. But at the end of the day, is it worth losing your business over? Is it worth losing your livelihood, losing your reputation, losing your freedom? These are the questions that you have to ask. It's easy to save a buck here, but it's as if you literally cutting off your nose to spite your face.
Absolutely. I totally agree. And kind of winding down here, but I would like to ask all of you, share what you do. Someone is looking for you and what you do. I promise you. I love people to network in the comments and just share your website, share your links, and network with each other. So we're kind of winding down here. That's going to do it for this edition, but I would leave you with this. Listen, if we need a new engine, we're going to seek out a mechanic. Most of us, right? We're not going to try to drop an engine in our car. And if we need surgery, we're going to go to that surgeon. We're going to need a heart surgeon. We're going to do our research. But sometimes, somehow, I don't know why, but when it comes to money, we try to make it a DIY project. It really is not a do-it-yourself project. We'll start to try to ask people like our broke Uncle Larry sitting on the couch, how do we become wealthy? And if you're Uncle Larry, I apologize. I'm just saying that we got to seek out the specialist here. Right? If we're going to really win this money game, it really requires to seek out specialists. And we'd love to chat with you. I'd love you to connect with Miss Chris. And definitely, because it is truly about learning how to play money chess. And so remember, folks, money likes speed. Wealth takes time, but money likes speed. So if you're feeling like you need to have that coffee chat, do it now. Book it now. Even if it's not for you, you don't know unless you have that conversation, right? Because a lot of times people are worried about making too much money. Listen, I don't think there's any such thing as too much money, because as I have become wealthier, I'm going to give more money. A lot of people are attached to my red wagon. And you know what? There are a lot of people that are attached to your red wagon too. You are the one in your family that's supposed to change your last name forever. But it requires us to know the rules of the game. So we appreciate you. Thank you all. We appreciate the comments. We appreciate the questions. Absolutely. And we're looking forward to seeing you next at our next Tax Tip Tuesday. Say that 3 times fast. I love it. This is so much fun. Thank you for your time, Chris. We appreciate you. And we will see you all at the top, because we know it's way too crowded at the bottom. And it is 2025, and it is your year to stand up and thrive in 2025. Thank you, everyone.
Bye.